Hello and welcome to a CARES Act overview. Today, I want to talk about a few individual stimulus provisions included in the CARES Act. We'll also talk about the Qualified Improvement Property Fix and the SBA loan programs that are available under the CARES Act. Before we get started, I just want to give a little background on Withum. Withum is a forward-thinking, technology-driven advisory, tax, and audit firm. We have offices stretching from Boston to Florida, from New York out to Irvine, California. The firm is over 1,200 employees strong, helping put our clients in a position of strength in today's business landscape. Our real estate services group provides a broad array of specialized services to the real estate industry. They include cost segregation, like-kind exchange planning, compliance, lease accounting, and cash flow and budgeting assistance. Among its various industry memberships, the firm is a proud member of NAIOP. Looking first at the individual stimulus provisions, the IRS has started to deposit advance payments of the 2020 recovery rebate into taxpayer accounts. The rebates are $1,200 per person, that's $2,400 for married individuals, and an additional $500 per child. Eligibility for these payments phases out by $5 for every $100 of income over threshold amounts. For single filers, that threshold amount is $75,000. For joint filers, it's $150,000, and for head of household, it's $112,500. Advance payments are going to be based on the 2019 or 2018 tax return income if a taxpayer has filed those returns. In addition, the CARES Act relaxes rules related to distributions and loans from retirement accounts. Coronavirus-related distributions will be subject to tax, but will not be subject to the 10% early withdrawal penalty. The tax on these distributions can be paid over 3 years, and funds can be recontributed to the plan without regard to annual plan limitations during those 3 years. Loan limits from qualified plans are doubled for loans taken before September 23, 2020. The loan limits are now 100% of the vested balance, capped at $100,000. Last, required minimum distributions from IRAs and certain defined contribution plans are waived for the 2020 tax year. The CARES Act also made a long-awaited technical correction related to depreciation of qualified improvement property. Without the fix, interior improvements to non-residential real property made by the taxpayer were subject to depreciation over 39 years. After the CARES Act, these assets can now be depreciated over 15 years and are eligible for the 100% first-year bonus depreciation deduction. This fix is retroactive to January 1st of 2018, and it offers taxpayers a unique opportunity to amend prior tax returns. This provision, combined with other provisions of the CARES Act, may open up the doors for significant tax refunds for affected taxpayers. Turning now to the options offered under 2 new SBA programs, the Payroll Protection Program offers small businesses the ability to apply for a loan to cover their payroll costs during the disruption caused by coronavirus. The program is open to businesses with fewer than 500 employees, although size calculations may vary by industry, and it's being administered by the local banks who are qualified SBA lenders. The program is available for sole practitioners, independent contractors, and other self-employed individuals, in addition to those businesses with under 500 employees. The maximum loan amount is calculated as 2.5 times the average monthly payroll cost during the 1-year period before the date on which the loan is made. Some banks are also calculating it based on 2.5 times the average monthly payroll cost during the 2019 tax year. Proceeds of this loan can be used for payroll costs, healthcare and other benefits paid on behalf of employees, rent, utilities, and interest on mortgage and other debt obligations. The nice feature of this program is that the loan is forgivable so long as proceeds are spent on eligible costs and the business maintains its average employee count and salary as compared to a base period prior to the coronavirus crisis. For businesses without payroll or otherwise not eligible for the PPP program, the Economic Injury Disaster Loan, the EIDL, may be an option. This program is available to small businesses with 500 or fewer employees and is applied for directly through the SBA website. For these loans, the SBA is going to be waiving the credit elsewhere clause and is also making emergency grants available up to $10,000 to applicants within 3 days of applying for the program. These grants will not need to be repaid, but will reduce any forgiveness that's available under the PPP for businesses who receive both loans. I want to thank you for your time, and if you have any more questions, we would like to discuss any of the CARES Act provisions further, please feel free to reach out to us.